In this presentation, we will process the payment of the payroll liabilities within QuickBooks after the payroll pay period of November within our payroll problem. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We have the open windows open. To open the open windows, we go to the view drop down and the open windows list. We're now going to go into our report, the balance sheet report, to see where we are at before we process the payroll liabilities and pay them. Reports drop down up top, company and financial. We're going to scroll on down to the balance sheet standard. Change those dates from, let's go to the customized reports to do so. Changing the dates from 01/01/21 to let's make it 12/31/21. That's January 1st, 2021 to December 31st, the year that we will be working on. While we're here, I'm going to change the fonts as well. You may not need to, but I'll do so here. Font size, let's go ahead and make it 11 this time and say okay, yes, and okay. Here we have our information. You'll recall that we have these liabilities lined up here. Those are the things we're going to pay. We're going to pay just the tax liabilities. We're going to leave the liabilities for the insurance and benefits so we can see how each will react. We're going to use the payroll processing format to do that rather than just opening up a check and writing it. We'll do that from going to the home page and the open windows over here. This is only one way you can do this. You can also do it by going to employees and go to the pay taxes and liabilities. I like doing it this way because I like the little picture that tells me that I paid the payroll here and now we're paying the liabilities there. So we're going to go to the pay liabilities there. Make sure that we have the dates proper here. We're not taking the date range. We're not taking the range of when the month, in our case of November, that we processed payroll, but the day that we made the check. The day will be 12/01/21. So 12/01/21. Now there's a date range because it is possible that we wrote checks, payroll checks, multiple days, but typically we'll have one day that we wrote the checks. So we processed the payroll, we now wrote the check. So 12/01/21. Okay. Now let's review this again. Let's check our dates. We've got the review the liability checks. We're going to say that's okay. We're going to actually write checks through this process. Now we ended the payroll process in November. We paid payroll every month. The payroll period was November 1st through November 30th. We wrote the check on December, the following day, and that's the pay period we have here. That's what counts for the liability because that's usually when the government determines when we have to pay off the liability. And then we're going to write the check on whatever date it currently would be. Typically, we're going to say here that we're going to pay the payroll liabilities off in the middle of the month, which is going to be 12/15/21. So in other words, payroll process November, we wrote the paychecks on 12/1, December 1st, and then we're going to pay off the liabilities related to payroll to the IRS, to the government, to the treasurer, to the Fed on 12/15. So if we go through here, I'm going to check off just the ones, not the benefits, but just the taxes. So not the insurance, not the union dues. We haven't paid the union for a while. We better probably going to have to do that soon. We're going to get in trouble. But in any case, we're going to go to the federal withholdings here. So federal withholdings, FIT for the payroll taxes. These are employee withholdings. Medicare, employer and employee. And then the Social Security, employer and employee. That'll come out to $14,316.61. If we compare that to our journal entry, in essence, we have the journal entry here. And 14,316.59, so it's rounding difference. But and we group together in our example the employer employee portion of Social Security and Medicare because that's how it's shown on the financial statements in our payables, the way we set that up. Okay, so that is that. It looks okay. We'll just double check everything coming out of the checking account. That looks right. Pay date, pay. That's when we wrote the paychecks. Looks good. So let's create this information. There's our check. So here's the check amount. Here's all the accounts that are going to be affected by it, or the payroll items that are going to drive the accounts that'll be affected by it. So we're going to say, okay, that's good. Let's save and close this. Let's go back to our balance sheet and see what happened. So if we go back to our balance sheet, I'm going to say, yeah, let's refresh. Checking account. Double clicking on the checking account. This is all information in the checking account now related to payroll because that's all we're processing. We had the payroll for August here, and then this is prior payrolls. And then we paid the state, the EDD, just for SUTA, state unemployment. Then we paid the Treasury, the Fed. Then we ran payroll again for September that we actually wrote the check in October 1st. And then we paid the state, paid the Treasury. And then October, which we paid in November, the paychecks. Then we paid the checks to the state and Treasury. And now we are in November, which we processed in December. So here's our 4 paychecks. And now we just wrote another check for the United States Treasury for the withholdings that we took from the employees and those payroll taxes for the employer as well. So here's our check that was generated. You can also find that check on the check register. If we go into banking up top and use register, we'll also see, and we're going to say it's the checking account. That's the one we want. Here's the check that was generated. Notice it reports it as a liability check. It's just a check to the bank. The bank's just going to see a check, but we're going to call it a liability check in QuickBooks, helping us to know that QuickBooks helped us to make that check. We did the QuickBooks liability check process to get there. Closing this back out, we now see that all the liabilities have disappeared related to payroll taxes. They're gone. Only the ones related to the benefits are still remaining. And that's, of course, because we paid them. So we could see them on the trial balance by going to, this is where I would typically go to see accounts and be able to kind of drill down on the detail, zoom, auto zoom, or zoom in, as they call it, as we would on the balance sheet. So I would go to the accounting and taxes and the trial balance, changing the date range from, once again, 01/01/21 to 12/31/21. Here's our information. I'll make the font a bit larger once again. Going to the 11, let's make it. So that we have that. And so then these items are now gone. What happened? Well, if we go into the FIT, we're going to see that this is the normal thing that happens. We had a 0. We had the first payroll, and then we paid it off. And then it went up with the next 4 paychecks, and then we paid it off. Next 4 paychecks, paid it off. This is where we are now. We just ran this payroll, and then we paid off the payroll liability. So we ran the payroll for the month of November in December 1st, and then paid off the liability that we withheld, in this case the FIT, with this paycheck. That's not the check amount. If I double click on it, that's going to be the amount that is applied to the FIT, federal income tax, 8399. And if we close that back out, that's that item. Social Security be the same, Medicare, so we'll go to FICA. This is Social Security. Same concept, it looks longer, but we still have the same idea. It starts to zero out after every pay period. First pay period, it zeroes out because we paid it. Incurred debt, paid it. Just like every payable account, just like an accounts payable. It went up, and then we paid it. It went up, and then we paid it. If that doesn't happen, if you don't see a routine like that, something might have a problem somewhere. Probably an issue. It should look something like that. And now we have the same thing here. The only difference here is now we have 2 for each employee. Why? Because there's an employer and employee portion for FICA taxes, Social Security taxes. If we go into any one of these, it's the 22161 for the Treasury. And that's the 2261 that they broke out. Notice they're not breaking it out by account as we would in the expenses tab. They're breaking it out by item. And the item is what's telling us where it's being driven to. So remember that the items are the driving factors, kind of like an invoice. So if we close this back out, an invoice where you choose inventory items and the items are the ones that tell it which account will be hit by the creation of the invoice. Same thing here. These items are telling QuickBooks which accounts are going to be selected. In other words, if I go to the lists up top and we go to payroll items and we find these payroll items, I'd have to go in here and say, well, what are you doing with that payroll items? Which liability or account are you hitting? When we set that up, it then chooses the liability account that will be selected there. So we're not listing, closing this back out. These aren't actual accounts. Closing this back out. Closing this back out. So there's our information here, and that's going to be our trial balance, and we're back down to the zeros in the liabilities. If we go to our data in Excel, we're only left with the benefits, the group insurance union and retirement. That adds up to 33,161. If we go back to our balance sheet in the open windows, balance sheet open window, 33,161 about is our current liability. So it looks like we're all in alignment here. For more accounting information and accounting courses, visit our website at accountinginstruction.info.